Welcome to the Fear and Greed Business News Afternoon Report for Wednesday, the 31st of January 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, very big day for the market. Australian Bureau of Statistics figures show that inflation rose just 0.6% during the December quarter and 4.1% for the full year. Now, those figures came out and they pretty much ensure there'll be no rate rise when the Reserve Bank Board meets next week and possibly cuts later in the year. Bond investors are now pricing in a rate cut in August and another one in December. The Aussie dollar fell 0.5% against the US dollar, and the S&P ASX 200 hit a new record high, closing up 1.1% to 7,681 points. As I said, a very big day. It's all because investors are growing confident that, given rates won't be rising anymore, the economy won't end up with a hard landing and won't go into recession. The major banks led the way today, but they had plenty of friends. In fact, of the top 25 stocks on the bourse, only REA ended the day in the red. Quite a day. Story number 2, Origin Energy's chief executive Frank Calabria said the group, which last year almost, but not quite, got taken over by Brookfield in a $20 billion privatisation bid, is pushing into renewables. He highlighted new investments in large-scale batteries and UK affiliate Octopus Energy. He was speaking after Origin posted flat electricity sales and a dip in gas sales in the December quarter. Origin will update shareholders at its first half results in a couple of weeks on how it will pursue and fund its strategy through the energy transition. Last year's bid by Brookfield and partner EIG failed to get the 75% required shareholder vote. It's worth about $20 billion. It didn't get the vote mostly because of Australian Super. It used its stake to vote against the deal. Shareholders now want to know what's next. Also today, Energy Australia, one of Origin's big competitors, wrote down $1.1 billion of goodwill on the back of smaller margins on retailing electricity and gas. Story number 3, Bluescope Steel and Liberty Steel are set to receive about $200 million of taxpayers' money, and a move the Albanese government says will help steer the steelmaking industry along its energy transformation and create jobs. Bluescope secured $137 million for the upgrade of its blast furnace at the Port Kembla Steelworks, while Liberty won about $63 million to replace its traditional blast furnace at the Whyalla Steelworks. According to the Financial Review, Energy Minister Chris Bowen said the investment was about securing the long-term future of the steel industry and supporting industries to adopt and manufacture cleaner technologies. For example, 90% of the materials that go into making of wind turbines are steel and cement. Therefore, we need those industries to be working. Story number 4, another bad news story for the nickel sector emerged today. Perth-based IGA will shut down its Cosmos nickel project in Western Australia, triggering more job losses in the state. The Perth-based miner will write down the value of its nickel assets by about $190 million. Now, IGO bought Western Areas a little over 1.5 years ago, paid about $1.3 billion. It's now written off around 90% of that, in large part a reflection of the cheap Indonesian mine nickel hitting the global market. Almost 400 jobs will be lost at Cosmos, including workers from mining contractor Perenti. And story number 5, Microsoft has posted its strongest revenue growth since 2022, spurred by interest in AI products that in turn are driving renewed spending on cloud computing. Revenue for the December quarter rose 18% to $62 billion. That's a lot of money in 3 months. Earnings were above analyst expectations as well. The Azure Cloud Services business did particularly well. Efforts to bake AI into a variety of Microsoft products such as Azure, Office and Windows is starting to pay off. But reflecting just how high expectations are around Microsoft, its share price hardly moved after the result. Microsoft is now worth $3.04 trillion. It's overtaken Apple as the biggest company on Wall Street and in the world. And Google's parent Alphabet also reported fourth quarter earnings. Advertising revenue was well below expectations as higher interest rates pressured marketing budgets. Alphabet recorded fourth quarter revenue of $65.5 billion. Its share price fell after the results were announced. That's it for the afternoon report for Wednesday, the 31st of January, 2024. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Instagram, X and Facebook. Join Michael Thompson and I tomorrow morning for the Fast 5 by Fear and Greed, the top 5 business stories you need to know in just 5 minutes. I'm Sean Aylmer. Enjoy your evening.